So while Andy's basically crying about the video that I made about him, I thought, you know what, let me just drop the weekly market update, because again, everything they are saying is irrelevant. What they don't know, that every time they try to respond to me without what I asked them to, they just digging a hole for themselves even deeper. Maybe you should ask his wife how she gets that 96 or 95% strategy that she claims to have. But that's something that we're gonna put to the test as well, right? So yeah, guys, next week is gonna be one of the busiest weeks in trading history. So Forex Factory, very straightforward. Quickly, we have got the interest rate decision, so we're going to talk about that, and then we've got the jobs report as well. Right now, these are the two things that will basically, these three actually here, plus the NFP for Friday. So we can clearly see that the index has been consolidating. Right now, normally when you see a market is stuck within a consolidation, this tend to happen during times of uncertainty. Right, I want to just show you guys. Now, this normally happens during times of uncertainty because investors are waiting for data that is meant to drive the price either higher or lower. In this case, we can obviously see here we've came into this consolidation on last week Wednesday, and we've been stuck in that area for about 2 days here as well. So there's only two ways this can go. You guys know, it's either we're gonna go up or we're gonna go down. Now, this is all determined by the interest rate decision. Now, we're gonna talk about two possibility outcomes over here, probability outcomes, and we're gonna talk about this one over here, right? If we do drop below this, and I'll tell you on what basis you can expect this to happen so that you can actually keep track of the data when it comes through. The first thing that we are going to look out for is the interest rate decision, right? The interest rate decision is one of the key points, key data in any economic, for any economy. So basically what we do want to see is that if the Feds does come through and they start and they had hiked the interest rates, you can definitely expect the dollar index to go higher. Why? Because higher interest rates tend to attract investors, and therefore there's a negative correlation on the other side, which we're going to get to. If the Feds decide not to hike the interest rates or keep it at the same, then we can definitely expect this market to continue lower, because that basically means that investors are going to be like, oh, you know what, this is not ideally what we want, so we're just basically going to take out some of the money. Remember, high returns normally attract investors. So remember, Fed hike rates, so we're going to put that there, and then we're going to clone that. Where's the clone? There we go. Fed hike rates, Fed do not hike the rates, right? These are the two possibility setups, and the reason why I say that is because we do have lots of dollar news coming through this week, so I don't want to give you guys an incorrect breakdown, because to be honest with you, there's no way I can anticipate which way the market's going to go unless the data has been released, right? So next up, we're going to take a look at the NASDAQ 100. Now, the NASDAQ, you can see over here, this market had broken above this level of resistance. It's now back testing it as support. But remember, due to the negative correlation between the dollar index and the stock market, or indices, as most of you might know it, if this move can potentially go higher, or it can even go lower. Again, if the Fed does hike the interest rates, you can expect this market then to correct itself back to this previous level of resistance as support. If the Feds choose not to hike the interest rates, then by all means we can definitely expect this market to continue higher. This is the range. Remember that data is coming out in 2 days. Monday is going to be a quiet day. Tuesday, some news, but this is really going to shake the market. I will be sure to give you guys an update on the market once that does come through. This is the way that we can expect this market to take place if the Fed does come through and hike the interest rates. If the Feds choose not to hike the interest rates, we can expect this market to continue higher. The reason why stock markets tend to continue higher when the Feds do not hike interest rates, because low interest rates or no interest rates doesn't put that much strain on consumer debt. Therefore, consumers has more money left to spend, and on these companies that are listed on the stock market, such as Apple, Amazon, and these companies, they normally generate a revenue throughout consumer spending. So they will only grow when consumers are spending, but consumers cannot spend if interest rates are being hiked, because that interest rates are linked to their debt, and once that interest rate increases, their debt by default increases as well. Therefore, they have less money to spend, and that's why we look at the consumer spending index to measure inflation data as well. Next up, we've got the Dow Jones. So the Dow Jones, we can see a beautiful price action. We had the market that basically broke above this level of resistance, and you can see this is what I'm talking about over here. This is also a market that had consolidated we came into that consolidation in December, and we finally broke out on the 18th of January. So you can see it's been a long while. We are currently trading, I won't say trading above, we are short-term trading above structure, but we could potentially be entering a range for now, because we can see this market is currently stuck between this previous level of resistance got broken, it's now support, and we are stuck between resistance there and support here. Again, if the dollar index does, if the Fed does hike the interest rates, by all means, this correction, whether I think they call it a fair value gap, the SMC, for this market to come back and test this previous level of resistance as support. If the Feds do not hike interest rates, then by all means we can expect this market to continue higher. And the rest would basically go for gold as well. You can see here gold has not basically done anything, but I know a lot of people that probably blew their accounts here also. You can see how gold has not really given us any massive moves. So again, we know how we're going to take a look at this. Let me just do that. Okay, so gold, if the Fed does hike the interest rates, gold's definitely gonna drop. We can expect a pullback and then a continuation. If the Feds do not hike the interest rates, we can expect this W formation to be completed on gold, which is that one there. And then from there, we could potentially go and fill in that wick. And then next up, we've got the S&P 500 over here. The S&P 500 opened up with a gap. This market really has got a long way to go, but again, we need to be mindful. All of this data is the only thing that we need to wait for is the Feds to basically come through and give us an indication of what they are expecting the markets to do, right? So here you can see here it looks much clearer on the lower time frames. So on the 4-hour time frame, you can see we came into this range over here. We are now stuck between this level of resistance as support and that level of resistance. We came in there on Wednesday and we've been stuck in there just like the index as well. So guys, I will give you guys another update probably after Wednesday, or when is that data coming out? On Wednesday. Yes, until then, please be careful this week. We've got a lot of news coming through this week. That is it from my side. Thank you for your time, and as always, cheers. Yeah, I'm just not laughing for these guys. But anyways, cheers for years, guys.